Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Coming up on Market to Market, finding ways to capitalize on carbon in farm country. More debate over price transparency as a new packing plant comes off the drawing board. Reducing the chances of famine.
It's going to depend on, is the crop out there?
And market analysis with Jeff French, next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, June 25 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. If a product isn't available, making the sale is a challenge. Try getting a new vehicle not on the lot or a house not listed with the realtor. Sales of existing homes fell for the 4th straight month as a limited supply and soaring prices kept many would-be buyers at bay. Orders for big-ticket manufactured goods rose for the 12th time in 13 months. The Commerce Department reported transportation orders were a big factor in the expansion. Consumer spending was unchanged in May as incomes dropped for the 2nd straight month as stimulus money wound down. Congress went shopping for new roads and bridges this week as part of a bipartisan agreement on infrastructure over a 5-year, $973 billion bill in new spending. The Senate, meanwhile, created a third-party carbon certification program at USDA. The issue of carbon could offer farmers a new avenue for revenue. Josh Bittner reports.
This week, Iowa rode the bleeding edge of monetizing climate value through regenerative and sustainable farming practices by forming a carbon sequestration task force. Republican Governor Kim Reynolds will chair the group, created by executive order, who will review research, bird dog economic opportunities, and determine the state's role in aligning with Biden administration priorities on climate change.
I guess it really doesn't matter what you or I or your viewers think about it. Our customers are telling us to lower the carbon footprint. So if we do that, that's how we make more money, is you get a premium in those types of markets.
Iowa Renewable Fuels Association Executive Director Monty Shaw lauded Reynolds' move to get ahead of the curve, but adds regardless of politics, business shifts on climate are driven by consumer dollars.
MasterCard, for example, have a carbon calculator when you get your credit card statement at the end of the month that can tell you, based on your spending, what your carbon footprint has been.
In recent months, several farm space virtual events, like one this week hosted by Indigo Ag, have highlighted the demand for domestic carbon credits generated through farming.
I made money.
There is truly a market there for these carbon credits.
Proponents say conservation efforts like cover crops and reduced tillage improve soil, lower input costs, increase profits, and offset pollution from industrial sources looking to mitigate their own carbon emissions.
Not only do we need to neutralize and decarbonize, but we need to start drawing down more. And a carbon removal will do that. Soil is a carbon removal.
Near week's end, a bipartisan bill passed the Senate to break down technical barriers for farm and forester entry into carbon credit markets. Citing a recent lab study which found typical biofuel plants have lowered their carbon footprint by nearly 25% over the past 15 years, Shaw says Iowa now has a unique opportunity.
Think about corn ethanol. That corn plant sucks carbon dioxide down from the atmosphere when it grows. Right now, when we ferment that corn into ethanol, it releases that carbon dioxide, and it's just kind of an annual cycle, goes back and forth. But if we capture that carbon dioxide and then do the sequestration that this task force is looking at, we actually could become carbon negative.
For Market to Market, I'm Josh Bittner.
If economic logic of competition benefits the consumer, the same can be said about the provider of goods. If more can bid on your wares, the fight for your product creates opportunity for growth. The beef producer has been looking for more options with an eye on raising prices paid at the packing house door. John Torpy has more.
Turn to Senator Smith, who I believe
Cattle industry officials and researchers were on Capitol Hill this week to examine the issues facing producers.
Does captive supply create more leverage for packers to pay lower prices for fed cattle in the cash market?
Appearing before the Senate Agriculture Committee, the panel discussed a range of subjects, including price discovery and the impact of the cash market on the supply chain.
When the Big Four can have all of that captive supply, so they do not have to go out and compete for those cattle, then they can push down the prices.
Along the border of Nebraska and Iowa, a fourth-generation cattle feeder believes building a beef processing plant has the potential to solve some of the concerns addressed in this week's hearing.
What the last 2 years in the cattle industry has taught us is that we have a deficiency in capacity to process cattle in the Midwest.
For a decade, Chad Tinniger has been looking for ways to build a processing facility that meets the needs of the region's cattle producers. If all goes according to plan, the Cattlemen's Heritage Processing Facility will open near the end of 2023.
1,200 head family farms is our target, and we plan to have all our cattle in our pipeline coming through our plant already. So we won't necessarily, in 5 to 7 years, be on the open market bidding against anybody else. They will already be procured by us in our pipeline.
By locating the plant in western Iowa, Tinniger hopes to attract a workforce from nearby Omaha, Nebraska, while giving producers in 6 Midwestern states access to a regionally located processing plant.
The fact of the matter is, if you look at the industry, there are plenty of profits in this industry from the ranch all the way to retail. Our attempt using the family farms is to spread that profit around. There's plenty for everybody.
For Market to Market, I'm John Torpy.
Food insecurity is a persistent problem. In some cases, that insecurity has led to famine. The World Food Program estimates 155 million people in 55 countries faced acute hunger last year. The bleak numbers have been motivation for governmental and non-governmental organizations to keep up the fight to eradicate hunger and famine. Despite the persistent problem, Colleen Bradford-Krantz found the outlook may be a bit more positive. This is our cover story.
Just a generation ago, it would have been hard to imagine someone saying this.
We have been quite successful at reducing and almost eliminating outright famine from the world.
Ken Menkhaus, a political science professor at North Carolina's Davidson College, isn't the only one who has noted how close the world has come to wiping out famine.
Historically, they were recurrent, so famines have disappeared. That's excellent news.
The one exception noted by these professors and the United Nations, which helps determine when a hunger crisis is officially declared a famine, is the situation in the African nation of Somalia just over a decade ago.
I think in the 70s and 80s and into the 1990s, famine was tragically very much a part of the political landscape in a variety of places, especially in Africa. It would have surprised people to hear me say just 20, 30 years later that we thought we had conquered famine. And that's why the famine in Somalia in 2011, which claimed over 250,000 lives, was such a setback and so stunning for us. It was a reminder that we haven't, in fact, solved all the underlying problems.
The world has, however, dramatically reduced famine-related deaths, most of which result from weakened immune systems combined with normally minor illnesses, rather than directly from starvation. Since the 1860s, the Americas have represented a small portion of such deaths. The same is true of the Middle East. Historically, Asia, India and China in particular, struggled for generations with severe and recurring famines, a situation that eased with agriculture's Green Revolution, which provided the region with better plant genetics in the 1970s. Parts of Europe suffered famine during the early to mid-1900s, including a World War II cluster of hunger-related deaths. Since the 1990s, Africa remains the only region still struggling with famine, though on a smaller scale than was typically seen in the past. Many of the historic famines were tied to either war or natural disaster, such as crippling drought. But with improved transportation and logistics for the movement of food and advances in agricultural production, experts say today's natural disasters are less likely to result in widespread death.
You can now move efficiently supplies from places which have surpluses to places which have shortages in a very rapid fashion. And that's the reason of many famine in human history in the past. It was not because the food supply was not there, it means it could not be moved.
More responsive government is key. Amartya Sen, a famous Indian writer on this topic, made a claim that was backed by strong evidence that democracies don't experience famine because democratic governments have to respond to the needs of their people. But there's also a number of other factors. The Green Revolution has dramatically increased production. We've got much better food aid distribution systems. We've got high-tech and low-tech abilities to monitor crops and yields long before we get to a loud humanitarian crisis.
Both professors say the work done so far to feed the world during the COVID-19 pandemic has been a remarkable example of the resiliency of the world's food system.
The pandemic was a gigantic stress test on our food supply systems in the United States in particular. It took some few weeks and months, a lot of headaches to adapt to it, but there was no technically shortages.
I remember going to the store at one point and they had no blueberries. And for a second, I was a little kind of put off by that. And then I realized, well, dude, we're living in a pandemic, you know. I mean, maybe there aren't supposed to be blueberries here now.
One potential consequence of the pandemic on future famines, however, is the financial pressure that may follow the U.S. government's accumulation of an unusually large amount of COVID-related debt in the last 2 years. Foreign aid, however, is typically only a small percentage of the federal budget, about 1% most years.
It could affect down the road the level of U.S. foreign aid that is manifested in actual money that's allocated to development assistance. I don't think it's going to affect humanitarian assistance, in part because we continue to be a major producer of surplus food, and we want to find constructive ways to use that.
Menkhaus is more concerned about the most significant remaining barrier to fully eradicating famine.
We'll never see famine eradicated as long as food can be used as a political weapon. And that, unfortunately, is what's happening right now. The Tigray region of Ethiopia, northern Ethiopia, there is a war and a military operation going on in which food aid is being blocked. And we're now hearing that we are just a few short steps away from the possibility of seeing outright famine there again.
Menkhaus, who witnessed hunger and starvation while living in Somalia during an earlier famine, says it's important to remember food insecurity will continue to be a major concern, even if the world keeps the wolves at bay by holding off future famines.
That has a searing effect on you when you see babies that malnourished. I got back to the United States, and my first trip to the local grocery store just to pick up groceries and set up normal life, I got to the produce section and I just started crying. I just lost it. It was the only time. I had to wait until I got all the way back to the US to see that level of plenty, to realize and process what I had just seen in the famine. It just strikes you what a miracle our food system is.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
The effect of next week's acreage report from USDA on the commodity markets was reduced when on Friday the Supreme Court ruled in favor of petroleum refiners in the battle over exemptions for blending renewable fuels. For the week, July wheat lost 26 cents while the nearby corn contract shed 19 cents. The soy complex also received pressure from the court's ruling. For the week, the July contract dropped 66 cents, July meal fell $26.20 per ton. December cotton added $2 per hundredweight. Over in the dairy parlor, July Class 3 milk weakened by a nickel. A mixed week in the livestock sector. August cattle added $1.25. August feeders increased $4.52, and the July lean hog contract plummeted $6.73. In the currency markets, the U.S. dollar index lost 33 ticks. August crude oil expanded $2.67 per barrel. COMEX gold gained $8 per ounce, and the Goldman Sachs commodity index dropped by more than 10 points to finish at 529.95. Now here to provide insight is market analyst Jeff French. Hello, Jeff.
Paul, great to be here.
All right, I'm going to throw you a curveball right off the bat, okay?
All right.
I got two maps I'm going to show you, and it's ones that I talk about all the time on our social media channels. One is the drought monitor. This is the drought monitor. Data cutoff is Tuesday morning. You can still see the west, North Dakota, South Dakota, Montana, Iowa, Minnesota, back towards the east. This is a look at what the rain was then for the week. This is a weekly estimate. Not the areas that needed it the most, but some areas that are big producing states. So which map had a bigger impact on commodities this week? The drought monitor or the rain precip?
Oh, I think the rain precip. We're going into pollination here pretty soon. And when you have this amount of rain forecasted for Iowa, Illinois, and parts of Indiana, they're saying, 60% of the belt here over the weekend could receive upwards of 1 to 4 inches. And sometimes even locally, even more than that. So, it's been hot out there, but we're getting some relief with some cooler temperatures. And I think that drought monitor, when you look at Iowa next week, is going to show some improvement, especially central and west. Northern
needs rain.
Yeah,
up towards Minnesota and the Dakotas, you've heard from everybody. But let's go into wheat country a little bit. Rain has been an issue in Kansas, Oklahoma for parts of this year, Texas. Is that the pressure on the market this week in wheat, or is it just harvest pressure?
A little bit of both. I mean, it's also the pressure from they're harvesting some of the best yielding wheat they've ever had. Now, it's production-wise, it's not going to be the biggest crop because acres were low. A lot of this wheat planted last fall was planted with a 4 in front of it. So we've had a big run up here, but guys were hurrying to try to get this harvested before the rain. But the yield reports that I'm hearing from are better than expected, and that could continue to pressure prices in the winter wheat. But it's a major different story when you're looking at the spring wheat up north.
Are we going to be done seeing corn with a 6 in front of it? I mean, we've already seen December is flirting with going back below 5. Are we done with 6s and 5s for a while?
I think we're going to have to see what next week brings. The demand has been good, but markets are about momentum, and we've seen momentum up to the upside. The last 2 weeks, we've seen it come down here to the downside. DC corn has lost more than $1 here in the last 2 weeks. It held the 100-day moving average at 518. We have not closed December corn below the 100-day moving average since August 13th of 2020. That is the exact day that this rally began on. So watch that number. I think that is a big issue and technically a big sign if we close below that. You get below $5, there's a gap down to the daily charts at 477.
All right, that 477 is a scary number. So if I have any bushels left discussion is done and in the past. If I've got anything left to contract for the fall that I feel comfortable doing with corn, do I do it now?
I don't. We've made sales at higher prices. We have our downside put protection in place in case it continues to go lower. We want to see what comes out next week. The trade is anticipating, this big growth in corn acres, which, I can't disagree with. But that's already been built into this market. That's well expected. What about if the USDA doesn't increase the acreage as much as the trade anticipates? That would be the bullish surprise. The trade is anticipating a pretty good growth in planted corn acres.
All right, let's take a question right now that came in via Twitter, and this is Pumpkin Man in Michigan, and he says, do you think we may have taken the top off yield potential, so that's a weather factor, and the markets are only trading large acres?
It could be both. I mean, depending on where you're looking at geographically, if you're looking in the Dakotas, parts of Minnesota, probably the top of yield has been taken off. Some places in Iowa, we've got some good rains here this last week, and we got some more coming hopefully here this weekend. So, I'm not ruling out yet that we can't see trendline yields. I mean, we'll just have to see what the weather in July brings. And we all know that corn is made in July, not in June.
What about soybeans? It's a little early for the weather story to take effect there. What's exports? What's the weight right now?
Well, it's really the whole bean complex. We saw a huge run up in the bean oil. The edible oils throughout the world, there was just a massive run of demand with low supply, and that kind of led us up. Well, that's corrected, and that's led us down here. Beans here in the last 2 weeks have shed almost $2.20 a bushel. Watch that 1265 area in November. That's a big technical area. That opens the door to lower prices. But we're talking about all this rain and price decline. The balance sheets, especially in beans, remain extremely tight. I mean, you're talking about a stocks-to-use ratio below 4% still. So, again, it comes back to momentum, and right now it's to the downside. We had some news out there that was negative, and Friday you'll see markets sell off like this.
What do you see the USDA? What's the crystal ball? I mean, the trend is saying one thing about acreage next week. Where do you see it?
It's going to come down to that corn acre number. I mean, the trade has got kind of that 94 million acres penciled in. That's kind of the average. One of the private analysts last year that was pretty spot on. I mean, they actually have bean acres going down. I mean, that would be a shock. Everybody is expecting more acres to be planted. I mean, we had a great run up in prices. Why wouldn't you plant it? There was definitely, reward there to be made if you got the planted in. So we'll just have to see what they say next week.
Livestock-wise, this is one that has really confounded a lot of people. Live cattle. We just had a story about the beef packing industry. Congress has been involved. They're sniffing to a problem that we knew existed, that there's just not many people processing. Is this the consumer driving this live cattle train right now?
No, I mean, this is the packers. I mean, the week that they have a Senate hearing, cash prices jump $3 to $4 higher. I mean, there's plenty of room for them to be paying up for animals. I mean, they're making anywhere upwards from $800 to $900 a head. Next week, though, the USDA report will drive the livestock prices. I mean, you have feeder cattle up here in this 160, 164 area. I think personally that needs to be protected going to this, because if there is a bullish surprise and corn does rebound, you will see the feeder cattle. They came into this week rallying. They'll reverse course real quick.
Cattle on feed 100%, placements 93, marketing's 123. Any surprises in the cattle on feed report?
No major surprises. It's pretty friendly. I mean, the placements came in 3% lower than expected. I look at the August board at 122. I think it's too cheap with cash at 126, 125 area. So I would look for us next week to get a bounce early, and then we'll have all eyes on the USDA report on Wednesday.
So what would be a bearish scenario if I'm a feeder from the acreage report next week?
92.5 million acres planted, and you'll see corn probably 25, 35, maybe even lock limit up higher. And you have November feeders. We got a double top on the charts at 164. Put on an August 155 put for the next week. See what happens.
Are you making recommendations then? I absolutely need to be covering a whole bunch of feed needs right now.
Yeah, I mean, it's on sale down here. I mean, if I'm a feeder and I'm looking at covering my fourth quarter needs, absolutely. I mean, you have meal right now, bean meal, that's $100 off its highs per ton. Corn prices, $1 off their highs in the last 2 weeks. And beans, $2.20 off the highs. So yeah, I would be covering feed needs here.
In the hog market, we're flirting with that $100 mark. And what's going to keep us from staying above it or going below it?
Well, we've had a big sell-off here. I mean, we've broken $20 to $24 per 100 off the highs here in a real quick fashion. The funds are going to control that. The funds had a massive position. They were long 88,000 contracts. It's estimated now they're probably long about 65,000. So do they want to defend that position, or do they want to continue to liquidate? You know, you look at the fourth quarter hogs, they're down here at 86 cents. So are we anticipating a fall off of demand? I mean, typically, yes, the summer months after, 4th of July, we do see a little bit slower demand, kind of the dog days of summer. But they're pricing in probably a pretty steep decline already. We'll just have to see where that brings us.
Real quick, cotton in 10 seconds, cotton acres. Are we going to see that there was maybe more taken away to soybeans and cotton?
I think it's going to be less than 12 million acres. And it's been tremendously wet down there in the Delta.
Big problem. Well, I asked you a question in 10 seconds, my own fault. Jeff French, thank you.
Thanks, Paul.
It's my hazing. All right, that'll do it for this installment of Market to Market. We will talk more in Market Plus, so you can join us there. Find that on our website of markettomarket.org. YouTube has something for everyone, including full episodes, stories, and our Market Plus. Subscribe by going to our page of Market to Market. Next week, the data, markets, and surveys of the USDA. Thanks for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.